This week we ask, are you as happy as the other 91% of small business owners in this country, or are you as grumpy as me about your corporation tax? Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host Claire Hancock is a finance director, chartered accountant and entrepreneur. And every week I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So Claire, there's a reason we don't do a video version of this podcast, isn't there?
Yes.
And why is that?
Because we are both sitting here in our pants because it is so goddamn hot
So
again.
hot today, so hot indeed. Trust me, this is something that you wouldn't want to see. Well, maybe for you, but not for me.
Wow, I don't know. Judging by some of the messages that I get on YouTube and social media, maybe it's something that some people would like to see, apparently.
Says the trolls. Anyway, this week, let's see what's been going on in the news. Yes, Claire?
Yeah, absolutely.
So I believe that apparently it's come out that us business owners are extremely happy people. Is this the news? Is that right?
Yeah, this is something I was reading in an article online in The Guardian, and I was absolutely bloody staggered by this, if I'm honest. It said that 91% of business owners are happy versus 82% of employees or workers, which very, very high statistics and not really something that we experience. Generally,
are most of your clients just miserable buggers then?
No, not even my clients. I just think...
Just me and you. Yeah.
I just think as a country, could you imagine coming across 91% of happy people?
Just generally, let alone
just
business
generally,
owners.
let alone workers.
Had a lot thrown at them in the last 5 years or whatever else. But
yeah,
it's an interesting story, that's for sure. I don't know, but is it that people, when they're asked as business owners, just always think about what the other side of the coin could look like if they were working for somebody else? Because most people set up businesses because they describe themselves as unemployable or, wouldn't want to work for somebody else. And maybe therefore they think, cool, if they find out we're not happy with this, they might send us back to employment.
Well, there is an element of that. There's a case of a lot of people want the grass to be greener and things like that. And there is maybe a difference between complaining about something, maybe complaining that taxes are too high or utility bills are too high for businesses versus being unhappy. I think that's the thing. You could be happy, generally happy, but still have an issue with certain points of being a business owner maybe. But yeah, overall, and I think this is backed up by other statistics as well. There's a Federation of Independent Businesses. They say that optimism's been below average for over 30 months now, and the uncertainty's been at the highest since before the pandemic. So
where did you read this article?
In The Guardian, which
okay,
I must
it's
say,
complete bollocks.
Not
I'm just
my usual.
I'm just reading here
the
bit that threw me. It wasn't even the 91% of business owners, but versus 82% of employed workers. You're telling me that if you go out to the street, 82% of workers will say that they're happy with working. I just don't. This sounds crazy.
Well, okay, so what we've learnt today is nothing to do with how happy business owners are or aren't.
Choose your media carefully.
And apparently The Guardian is not the place to go. But
anyway, if we did a poll between us two, are you a happy business owner?
Yeah, I'm fairly happy.
Oh, you've paused then. You paused.
Wow, I think there's...
Versus what, the alternative? That's what you're thinking, isn't it?
Oh, I mean, I'd never, ever go and work for somebody else ever again.
See, that's what I said. That's how I think most people have answered this.
And I think maybe I'm happy, but I'm frustrated because, as probably a lot of our listeners and other entrepreneurs, I've got this constant desire for things to be bigger and better. And I think that's what frustrates me the most, is I constantly want more, and that feeling never goes no matter what I achieve.
Yeah, I guess the feeling of frustration versus the description of happy are two different things, and people are just popping them in different boxes.
Yeah, but do I dread getting out of bed every morning and turning my laptop on or going into the office? No, I don't.
Well, thanks for that complete bollocks story this week, Claire. We'll move on from that, but it did involve a very interesting debate. But this week, I am complaining because this week's deep dive has come out of some confusion I've had this week. So let's move on to this week's The Basics of Corporation Tax. So I really wanted to do this, Claire, didn't I? Because I literally pulled you aside a few days ago and I said, right, based on the run rates that I'm doing this year for one of my businesses, we're probably going to make a profit of about £190,000. Oh, I understand corporation tax has changed once you earn above 50,000 in profit for 19%. And then as I understand, if you go above £250,000, it goes to 25%.
Yep.
And then I was trying to work out what happens if I land in the middle at this 190,000. So I went on the HMRC website, and my goodness, did I struggle to try and find an answer to this. So first of all, there's something called marginal rate relief. So if you have profits between 50,000, I'm just explaining it how before you explain it how it really is.
Okay.
Let me just explain it to the layman here, the layman businessman.
Don't lose everybody
This
in
is
the
how,
time being.
This is how it's described on the HMRC website. It's marginal rate relief. And then you click a few buttons and you go through it, and it's literally impossible to work out what that means or what corporation tax you would pay on those profits that land between 50 and 250,000 pounds. So Claire, please, for me and everybody else listening, since corporation tax has changed from a flat 19%, what are we going to pay? And most importantly, the reason I was doing this is it still better for me to pay myself through dividends or pay myself through a salary if I'm going to hit those numbers? I'm struggling with it. Help us out.
Okay, so let's start with just setting out some basics. So at the moment, the standard rate of corporation tax in the UK is 25%. Okay. Then if you are a business that has profits less than £50,000, then you pay the small business rate, which is 19%. Okay. If your profits land somewhere in between, then you are on what's called the marginal rate, or it's also been referred to as the tapered rate. And basically what that means is, depending on what your profits are, depends on what percentage you pay, and that percentage will fall somewhere between 19% and 25%. Okay. And I'll be honest, the calculation on the HMRC website of actually calculating what tax you've got to pay is the most mind-boggling calculation I've ever come across. And I don't understand why they've made it so goddamn bloody complicated. But I'm going to make it really straightforward for you. All you need to do is, say your example where you think your profit is going to be 190,000. Your first 50,000 is at 19%. Everything else is at 26.5%.
I'm sorry. More than 20.
Yep,
more than the
I know.
corporation tax percent.
But
what?
If you add up the total tax that you would pay as a proportion of 190,000, you're going to pay probably about 24.1% tax.
Woohoo!
So the two blended. So you've got some profits at 50. You've got your first 50,000 at 19%. Then you've got your next 140,000 at 26.5%, and that gives you a blended rate of around about 24%, give or take the maths a bit.
Okay. I'm with you.
And it really is.
That's all I wanted.
Straightforward
I just
as that.
felt like there should have just been a simple thing that they built into the website where I just put, what are your expected profits to be this year? I write 190,000 in. It tells me what the corporation tax is going to be. Why can't they just do that, Claire?
Well, I mean, yeah, I do
Is it
agree with you on this
deliberately
one.
made to be ambiguous, do you think? Or do you think they just don't? Why do they make it so difficult for people?
I'm quite a strong believer. Like, I know you. One person I don't really like a lot is Rob Moore. I think he is a bit of a conspiracy theorist person. And I think if he was on this podcast, he'd say the government are deliberately trying to make it complicated for you for some reason. And I don't believe that whatsoever. I don't believe for 1 second that our government is trying to make life harder or more complicated than it needs to be. I'm quite pragmatic about that.
But we can definitely agree they're not trying to make it simpler for us
but
ever.
For some reason, they're not
That's
able to make it simple. And
it sounds simple. A simple bit of code where in a simple we seem to be able to, they can do a stamp duty calculator.
Yeah.
The second it changes in law, they can put a stamp duty calculator up, but they can't put a corporation tax calculator up. Seems like that does seem like bizarre to me. And, I always feel like, when people make things overcomplicated, they do it because they're trying to keep themselves in business or whatever else, people do it. But it's strange anyway.
Yeah. I mean, there is an element of, if you're a limited company, I'd never say to people you must use an accountant, but if you're a limited company, I really don't believe you should be doing your own tax return. I think if you're a sole trader, then yes, the government has made the system so that, sole traders, people doing self-assessment, you can do your own self-assessment tax return. But if you're a limited company, the complications, the terminology, all of that is quite specific. And so there is an element of actually should the general public understand it. And I think this is where maybe the government get it wrong sometimes. I think it's really important as business owners that you understand your finances and that you can interpret the language. It doesn't necessarily mean that you're able to do the calculations and do the tax returns, though.
Totally and utterly agree with you, but that's not the position that I was coming from. And the position I was coming from is I want to make sure that I've got the tax available to pay. So I've got no idea how to calculate what that might be. How do I know what I'm keeping aside to pay that tax bill?
Well, Simon, this is where we do differ on our opinion, but I do not believe that you should be keeping money aside to pay a tax bill. So that's
what happens when you get the
interesting.
bill? So I get £45,000 and I haven't got it. What do I do then?
Well, you should have an accountant. So as a minimum for every business that I work with, I'll be doing a quarterly tax calculation for them based on the forecast that we've got for the year. So we know exactly how much that tax is going to be. And then we can also start to think, okay, do we want to maybe bring some costs forward or things like that to try and reduce that tax bill potentially? Because you can be a little bit clever with your tax bill by like moving expenses or even income between different years to try and change the amount that you do or don't pay.
Sure.
But should you keep 40 grand in the bank for 12 months doing nothing, sitting there earning a piddly amount of interest? Probably not.
But where are you going to get that money from in 12 months' time?
Well,
if you don't have it. So what happens in 12 months' time? So I spend that money, or I spend half the money, whatever else. And then in 12 months' time, we have a 45 grand tax bill. And we're, the market's not doing as well. And so we just don't have the money. How do I deal with that then?
Yeah, look, I'm not suggesting that you go and spend 40 grand frivolously and not think about and just worry about the bill the day you got to pay it. That's definitely not the right approach.
The very last thing that I would ever want to do is not be able to meet my taxes. That would be devastating for me. Just morally, I just have an issue with that.
Definitely the right thing to do for me as a pro-growth accountant to be challenging you and saying, what could you do with that money, that 40 grand that's sitting in your bank account today? What could you do with that money that could turn that into 80 grand in 12 months' time? Because you don't need that money today. You need the money in 12 months' time, but you're scared to spend the 40 grand today.
What happens if you invest that 40 grand in it and you just blow the lot and it turns into nothing? Because 90% of things business owners don't always work out, do they? I don't know.
I don't agree with that. I think that most business owners that set out with some sort of financial outlay, I'm not talking about brand new businesses or inexperienced business owners. I'm talking about
clear capital investments rather than just, I'll try some marketing. You spend 2 grand on marketing, it might not get a return.
No, but if you have been spending 2 grand on marketing for a couple of years now, and
it's working
and you want to scale it up,
I agree with that. It's different.
Then could you go and do that? And I think that's
they've got to be sure bets, haven't they? They've got to be a very calculated risk. Very calculated if you're going to spend your tax money.
Yeah. But also, we've got to remember that actually, although you don't consistently want to be paying HMRC late, you can pay HMRC late. It's not...
How much does that cost me?
You pay interest, which is the base rate plus 2%.
So a lot of money then.
Yes, but if you had to go and get finance for something else, say you've got that 40 grand sitting in your bank account, but then you're like, I do want to grow my business. I need to invest in a new website, or I need to do some marketing, or I need to buy some new equipment, or I want to open a new location. Actually, you've got 40 grand sitting there. Could you utilize that?
Sure. Yeah.
So there are pros and cons to it. And I'm not suggesting for one second that you just don't pay HMRC and don't communicate with HMRC. You do need to agree a time to pay arrangement with HMRC should you not be able to pay them. But
you said that way too quick, but yeah, I've got you.
But, actually, lots of businesses can't afford to pay their tax bill. That is the reality, because either they haven't planned for it or something has gone wrong. And HMRC generally work with businesses that are in that situation. So I think people are quite fearful of HMRC, but actually HMRC exists to collect taxes from businesses. Businesses can only pay taxes if they're in business. So
what about if I bought a Lamborghini and the taxman turned up and saw my Lamborghini on the driveway? Would he be angry?
Well, he would be angry. And then there's also questions about, as a director, you've got a responsibility to keep that business insolvent and to keep that business solvent.
And if we can all achieve that would be easy going.
If you've taken steps such as withdrawing money for yourself or buying personal assets such as fancy Lamborghinis and holidays and things like that, then actually you are not acting within your legal obligations as a director because you've made the business insolvent. It can't pay a bill. Yeah. And actually, as a director, you are personally liable if you have not followed your duties as a director.
Okay. So another question, and we get this from people quite a bit. Obviously, people are a little bit angry, frustrated that corporation tax has obviously gone up quite a bit. It's quite a big jump. For 5% is a big jump, especially if you pay yourself out of the
6%,
profit.
But we won't judge you on your math.
Sorry, 6%. I like rounding up. And so there are some people that have the sort of reduce tax view? Well, I guess there's two questions here. There's one which is, should you be doing more to reduce your profitability, so therefore you reducing your corporation tax? There's the two things. And there's two things about this. Obviously, you should always be doing everything you can to reduce the profit through legitimate write-offs in your business, but also should that be an attitudinal thing that people are sort of approaching it? Do you get questions like that from people?
Yeah. And if I'm honest, I don't work with that many clients that are very focused on tax, because it's just not my approach. It's not the approach I take. I think that I need to focus on building the biggest business, having the biggest revenue, the biggest profit, and then I'll pay the fair rate of tax, whatever that is, rather than people that are scrabbling around thinking, can I buy this? Can I do this? And just so focused on tax. I'm like, it's such a distraction, and it takes away from that pro-growth mindset that I've got.
How do you deal with that? I mean, there are so many, both in personal tax and in business tax, there's so many sort of like cliff edges that become so painful for some business owners. You know, it's like the personal tax rate and the whole 100 grand thing, and the 20, and then there's 60% marginal rate. There's so many of those in business as well that you come across. And how do you smash through that?
I think with personal taxes, it's a bit different, because especially if you're a limited company director, you've actually got choice. You know, with most of my clients, if I do their personal tax returns, then we get to the end of the tax year and we have a look at what they need their earnings to be for that year and the best way to do that. Because at the end of the day, as a director, most people will take quite a low monthly salary and then just take dividends to fund their lifestyle. So they're not actually making decisions about the most tax efficient way to extract money from their business. They're basically saying, I need X amount to live off, pay that in the most tax efficient way.
Yeah. Interesting.
But I think with businesses, I think that's a bit different to your personal tax affairs. And I do feel quite strongly with a business that you should just focus on being pro-growth and you should make business decisions.
Smash through those barriers. Yeah.
Smash through the barriers. Never let tax be a barrier to your decision, because at the end of the day, we're talking about small percentages. So, you know, other than the VAT rate, which I think is very different because that is a cliff edge for businesses and that directly eats into their profit, there isn't actually another business tax that really does that. And I think that you should always make a business decision that's based on growth, long-term viability, long-term profitability, and then you should figure out the most tax-efficient way to do that. So an example I gave was, okay, if you're planning on buying an asset and maybe just bringing the purchase of that asset forward a couple of months could make the difference whether it falls into one tax year or another, for example. That's a way that you can do that.
Awesome. Got you. Well, thank you very much for solving all of my corporation tax problems, Claire. You did it the other day when you came down and made the arrangements for me. But now you've shared that love with absolutely everybody else, and we're all happy and we can all move forward. Hopefully, we all wish that at some point our lovely new government will slightly cut corporation tax again to bring it back down for us. But
I doubt that very much.
Here's hoping.
We know Labour were very clear with what they were saying. We will not raise VAT, income tax. No, what was the other one?
No income tax. No.
What was the other one? National insurance for working people. And we now know Keir Starmer's definition of a working person, and that doesn't seem to encompass business owners. Actually,
I think there might be peripheral taxes. Corporation tax would be a difficult blow if they're going for pro-growth to really, really hammer that aside. So let's see. Anyway, we've got to move on, Claire, to this week's Profit Cash Growth Extra.
So I've got this week's Profit Cash Growth Extra, and this was something that I first came across when I was an employee, and I now have this in my business too. So when I was an employee, the business that I worked for used a company called Westfield, and we had Westfield Health Cash Plan. And we actually had Westfield plus Bupa, and I'll explain exactly what the difference is. So when you've got like Bupa or AXA or somebody like that, Vitality are a good example, they are like private health insurance. But often when you've got private health insurance, you've still got an excess to pay, and there are things that aren't covered, like opticians visits, and we go to the dentist and, you know, physio appointments, things like that you might pay for. And that's where a health cash plan can come in, because with the health cash plan, where I had it with Westfield was a great example. I paid about £7.50 a month. Now, this is going back a couple of years now, so it might be a bit more now, depending on what you had. But for example, £7.50 a month, that meant that I could claim back from Westfield. It's a bit like an insurance policy. So when I paid out for the dentist, I could send them a copy of my invoice and they would reimburse me up to £100 a year. And the same for like physio appointments or like going for a sports massage or something. I could pay for that myself and then reclaim it up to the certain certain annual limits. Now, why I think you might want this as well as private health insurance is because if you have an excess on your private health insurance, like I did with Bupa, it just so happened that my Westfield cash plan covered my excess. So if I had to pay an excess on my Bupa, I could claim the excess back from Westfield. So it actually meant that I was never out of pocket. So I think it's fantastic. It's a small outlay and actually it can make a big difference and be a really good employee perk as well. That was, like I say, when I first came across it.
Awesome. So a nice bolt on to private healthcare then.
Yeah, absolutely.
Brilliant. Perfect. Well, thanks, Claire. Thank you for another week of the podcast. As always, if you feel like you may have outgrown your current accountant, you can tap up Claire at the Profit Cash Growth team at profitcashgrowth.com. Check out the YouTube channel where there's a great video covering more about corporation tax basics. And if you'd like to reach out to us, ask us any questions, or please leave us a 5-star review on all the pods. And you can email us at marketing@profitcashgrowth.com. And we'll see you again next week.